There's one number that decides whether you survive trading weather bonds on Kalshi, and it isn't 90, and it isn't 80, it's 88 cents. And here's the math behind it.
The whole idea here is pretty simple. We're not trying to guess what the weather's going to do. We're trying to find the moments where the crowd's own fear has pushed a price somewhere it shouldn't be, and then we take the other side of that. But knowing which side to take isn't enough, because the price you pay for that trade changes everything about whether it actually makes sense. Here's what's actually happening. When people are trading these weather bonds, they tend to overreact to the scary outcome, the dramatic storm, the record heat. So they push the price of that outcome up higher than it should be, which means the price on the other side, the calmer, more likely outcome, ends up sitting lower than it should. That's the opportunity, buying the calmer side cheap. But here's the part people miss. If you buy it too cheap, if you're paying way less than $1 for something that's actually very likely to happen, you need to win almost every single time just to come out ahead, because the one time you lose big relative to what you were making. And if you pay too much for it closer to what it's actually worth, you're not really getting compensated for taking the risk at all. You're just breaking even at best. So there's a balance in the middle somewhere, a price where you're being paid enough to make the risk worth it, but you're not being so greedy about the price that you need a perfect record to survive. When we run the numbers on how these contracts have actually settled over time, that balance tends to land right around 88 cents, and that's the number we watch for. It's not a magic number, it's just where the math has consistently worked out best. But even if you find the right price, none of it matters if you bet too much on any single trade. It's easy to feel like you found a sure thing and just go all in, but 100% win rate is a dangerous idea, because the one time you're wrong is the time that can wipe you out. This is why we always size our trades in small pieces of our total capital, never the whole thing, because staying in the game matters more than any single trade. You need to still be around for the next opportunity and the one after that. So the rule really isn't complicated. 88 cents is the point where the reward is worth the risk without asking you to be perfect. And once you see that, you stop reacting the same way the crowd does, and you start noticing when their panic is actually working in your favor. We're not trying to predict what happens next. We're just trying to make sure the math is on our side when we place the trade. This is education, not financial advice. So think about your own risk before you trade. Follow for more of the strategies that don't usually get talked about. Stop guessing, start harvesting.